Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus is on Happiest Minds Technologies that's come out with the earnings. We do have two special guests now joining in from the company to detail for us the earnings insights. Mr. Venkatraman Narayanan, he's the MD and the CFO of Happiest Minds Technologies, is joining in. Warm welcome to you, sir. Thank you so much for taking the time out. We also have with us Mr. Joseph Anantharaju. He's the Executive Vice Chairman and the CEO of Product and Digital Engineering Services at Happiest Minds. Warm welcome to you, sir, as well. Thank you so much. Let me start off by asking you, Venkat, it was the best quarter since your IPO is what you reported. In fact, you've shown strong revenue growth of 17.8% on a year-on-year basis in the constant currency terms, with EBITDA growing by 13.3%. However, on the bottom line, we've actually seen the profitability after tax that's declined 12.5% year-on-year and 29% sequentially. Now, detail for us the overall quarter. Has it met your expectations? And could you also explain the reasons behind the variation between the PBT and the PAT also?
Thank you. Good afternoon. And I think you have covered all the points very well. In fact, it has been a very good quarter. Constant currency has grown by about 17.8% year over year and 11.4% sequentially. And EBITDA has grown 13.3% year over year and 7.8% sequentially. So if you look at it, the profitability numbers have grown, so have the top line numbers. This is essentially talking about the strength of the business and how we have started the year. However, when you come down to PAT, there are one-time expenses that have hit us this quarter, which is essentially a non-recurring cost. The acquisition cost of about 6.5 crores, and also we had a 13 crore one-time income last quarter. We have called it out as an exceptional income. So if you adjust for this, we are talking about a swing of about 20 crores. Adjust the 20 crores into our financials and you would pretty much be on a similar footing in absolute terms as far as PBT and PAT are concerned. PAT, there are certain elements of deferred tax and current tax on quarter on quarter basis. But other than that, the fundamental business remains strong. Profitability, there has been growth, and so has been on the top line. So this is why we have said that this has been one of the best years, the best quarters since our IPO, and we are looking forward to a similar performance continuing, obviously without these one-time expenses repeating themselves for the next few quarters for the current year.
Right. Before I go across to Joseph, Venkat, additionally, I wanted you to share your thought on the outlook on the margins for FY25. What improvements do you expect here? And when do you really anticipate margins will actually stabilize now?
Yeah, so we had talked about 20 to 22% in terms of EBITDA terms. When we did the acquisition, we were talking about the results and the acquisition early last quarter or late last quarter. Compared to the 20 to 22%, we have reported 23.9%, which is where we are. And that 23.9% in absolute terms has grown quarter over quarter, year over year. So there is an expansion in absolute terms. Now, this margin hides a few things. One is the investment that we have made into generative AI. We have made close to $1.5 million into generative AI business. We have called it out separately in the financials, and you can see those from our financials as well. But it is despite that, these one-time costs and the integration costs that we are talking about, we are reporting margins of 23.9% of EBITDA. I think we should head back to the 24% plus kind of a number in the medium to short term, but that's not a guidance or a forecast. That's what my aspiration is. Whereas in the meantime, our medium term forecast or guidance is about 20 to 24% in terms, 22% in terms of EBITDA.
Great. We will come back on the Gen AI business a little bit. Let me just first have a little bit conversation with also Joseph. Joseph, I wanted to understand, the macro perspective from you, with recession fears now emerging again in the US, potentially leading to a slowdown in discretionary tech spending. How does the demand environment really look, and what are you hearing from the clients regarding the spending plans going forward?
Yeah, good question, Sakshi. If you look at the recession fears, they've sort of come up in the last week, I would say, since the inflation numbers and the unemployment numbers came in. Prior to that, we're looking at, based on conversation with customers, the sentiment seemed to be improving, so I'll have to again, I was in India, I have to go back and check. But broadly, what I've been hearing from customers and seeing is that there is a little bit of caution, and I would say more than caution, there's a prioritization going on and more due diligence on what to invest in and what the ROI would be. And there's more focus on near-term revenue and cost-saving opportunities as opposed to long-term strategic investments. I'm not saying that that's not happening, but the priority is more towards how do we get by the next 6 to 12 months. So the ability to quickly identify these priorities and align our offerings has been very critical. And I must say that in the last 3 to 6 months, since we formed our industry group structure, bringing sales, delivery, domains together, we've seen an improved ability to identify this and respond accordingly to customers. Our hope is that, or at least my hope is that, in the next couple of Fed meetings, there'll be some good news that will come out that will encourage customers to continue making investments.
And also, Joseph, you could highlight how buoyant is the project pipeline? Are there any notable trends in client additions as well?
So, if you look at our revenues, which kind of is tracking the pipeline that we have right now, across all of our geos, we've seen growth in absolute terms. Now, you may look at the percentage of revenue dropping in the case of North America. That is because we've had pure software having pretty decent revenues in both Africa and Southeast Asia, the APAC region. And this is one of the positives of the acquisition. It's helped us to further diversify our revenue base. And if I look at across verticals, the pipeline, I would say, by and large, across all verticals, is at a decent to good level, depending on the vertical. And if you look at our revenues, manufacturing has shown a decline, but there are two reasons for it. One is there was a reclassification of a couple of accounts, which started with more of manufacturing capability, but they're actually aligned to the high-tech business. So that reclassification has an industrial, two accounts. So that has led to a little bit of drop at manufacturing. And we also had a couple of large India-based auto manufacturers where we finished the first engagement, and we're in discussion to do the next phase. So we will see that getting regularized in Q3, Q2 and Q3.
Okay. Bringing in Venkat back into the conversation, and I'd like you to now, give us as far as an outlook on the revenue is concerned. The company's already guided a 35 to 40% revenue growth for FY25. So I want to ask you, are you on track to meet this guidance? Is there a possibility of revision further as well, Venkat?
I would first, we didn't call it a guidance because it was to include the two acquisitions that Joseph just talked about. So we had talked about a forecast of 35 to 40%. We had assumed that we would, get the full quarter impact or credit for the two acquisitions because we had closed the conversations and we were into documentation early part of this quarter. But given that it's a multi-company and cross-border kind of a deal, it took almost 2 months to close the deal, which meant we only got about 40 days in terms of Aureus and 38 days in terms of pure software. Pure software 40 days in Aureus, 38 days into the consolidated financials. I had assumed that we would get the full year impact for both these companies and had made a disclosure of about 35 to 40% growth in terms of forecast, but that with the reduced number of days that we have, it would come to between 30 to 35, but there is no other change on that front. As far as EBITDA is concerned, we had told 20 to 22% is the EBITDA number that we're talking about, and we are holding on to that kind of a forecast. So I'm careful, I'm not using the word guidance because, these two companies add close to $50 million in terms of heft and size, which is almost 25% of the company of the last year's turnover of the company. So to that extent, one needs to take these kind of changes for 60 days or 30 days can make a significant impact.
Right. So this is you're talking about Macmillan as well as PureSoft, right?
No, Pure Software and Aureus. Macmillan was integrated from April 1st.
So by when will the integration be complete for that one?
Integration from a financial standpoint started from May 22nd and May 24th respectively. Now the other integration in terms of business started earlier than that, and we hope it's a continuing affair, and hopefully we should have the companies integrated.
Okay, and right, understood. Now, Venkat, you did point out that you've called out the contribution from the Gen AI business service, contributing 7.13 crores to the top line in Q1. One of the only companies that I've spoken to in Q1 that has actually called out a number contribution coming in from Gen AI. So that's commendable, right? Now, help us understand now going forward from here, what can we foresee down the line over the next 1 or 2 years perspective? Would you be able to call out as well that what is the exact percentage of contribution revenue wise that you would want Gen AI to really contribute over the next few years?
I'll give you a percentage contribution, and then after that Joseph can comment on the market outlook and how he sees Gen AI contributing to the overall revenues of the company. Today we stand at about 1.5%. It's proof of the pudding because, like I said, we have invested about $1.5 million in this quarter into that business, and it's generating. It started generating good interest and revenues for us, and it's obviously a part of the future outlook for the company. As far as how it pans out in the future, Joseph is close to customers. He'll be able to give you a view on that.
Okay, so Joseph, could you add to that?
I couldn't hear what Venkat said.
On Gen AI?
I'm not getting his audio.
Oh, okay.
Yeah.
On Gen AI, with the kind of revenue contribution he was highlighting, and where does he foresee going forward from here? Would you like to add to that?
So, I think we made a good start, Sakshi. We've had around 55 conversations in just the last quarter and around 15 POCs that we've done. The big driver is going to be moving these POCs into implementation and into larger projects. I think once we start doing that, we should be able to see the revenue from the Gen AI business unit grow. And I see a side benefit to it. I think some of our customers, we are breaking in with Gen AI. We are positioning ourselves as a technology leader, differentiating ourselves. That should also lead to other opportunities, cross-selling with our customers. The exact numbers, I think, we'll be able to work out based on the kind of progress we make. But we expect this to be a growth of engine of growth for us going forward, and that's the reason we pulled it out as a separate business unit.
Okay, got it. Now, Joseph, another thing, the company has also been enhancing the delivery channels in, say, US, Latin America, Eastern Europe. Have you begun to see the benefits from these efforts?
So, one of the advantages of Pure Software is that we've got, they have a delivery center in Mexico, and they do also have presence in Malaysia, Singapore. So as we speak, there are opportunities that we are discussing for providing nearshore support to some of our customers in Mexico. And we also have a couple of customers in the Southeast Asia region that we wouldn't have been able to service earlier because of feet on the ground. We've made good progress. These are, large multinationals on the verge of closing the MSA with them, and hopefully that will lead to a couple of large accounts. And from there, I'm very hopeful that both of these centers can be grown. PureSoft also has established, or rather at least a presence in Romania. They've not opened a delivery center. That would be another option. And these are some of the opportunities or options we are taking to our customers in the next year and a half. Expect to see more progress on some of these diversification.
Okay. Venkat, attrition was slightly higher. Is that a worry at all, or will it stabilize going forward from here? Any other key challenges that you believe the next few quarters you'll have to really look at?
I think we have stabilized as of now on attrition, but things can perk up a little given the way other companies are talking about compensation increases. Whereas as far as we are concerned, we have held out compensation increases this quarter, and I mean in Q2, and you will see the impact of that in our Q2 financials. But otherwise, we are hoping things to pretty much stay where it is. At the 13.5% that we're talking about on a trailing 12-month basis.
Okay. And overall, when we talk about FY25, do you have that kind of feeling that it is going to be better than FY24?
Yes, we have. Our headline suggests that we're going to have one of the best years in terms of absolute growth after our IPO. So percentage growth can be it can be misleading. In the early days, you can have percentage growth, which can be 3 digits and 4 digits. But, now that we are slightly a mature company, we've been in existence for 12 years, this will be one of the best years since IPO or even since the start, because our growth will be north of $50 million year over year in terms of absolute numbers.
Okay, wonderful. Well, on that note, thank you so much, Venkat and Joseph, for being with us on this show, explaining to us the insights from the quarterly earnings. I wish you both all the very best for the upcoming quarters and hope to see you soon back on Business Today Television with another quarter and updates. Thank you so much.
Thanks, Sakshi. Bye-bye.
All right, with that, we will wrap up this very special conversation with Happiest Minds. The management is pretty confident of posting one of the best years since their IPOs in FY25. So they are confident of meeting those numbers. They've already had the best quarter so far since the IPO, and they believe the entire year could be also the best one they have had since the IPO as well. So that is something that we will continue to look forward to going forward from here. Many thanks for joining in, but do stay tuned. There's a lot more in terms of earnings conversations ahead. Stay tuned on Business Today.